if you are a Chinese automaker, you will be looking at what is the next presidency going to look like? Does this hold in Congress, right? How much support for this is there beyond the person of the president, right? Who I think certainly has some interest in this, but I think there is, actually a lot of skepticism about some kind of deal that would involve maybe Chinese investment or Chinese technology beyond that. So I think, there's a lot of volatility still in the political
Yeah.
environment and yeah, between the US and China.
Ahead of the planned Xi-Trump summit in April, both Washington and Beijing are scrambling to put real substance on the table. Since the meeting in Busan last autumn, we've seen a fragile truce, few escalations, but no real reset. One question that's suddenly back in play is whether the US might allow some form of Chinese auto or V investment on American soil, something that President Trump himself has publicly floated multiple times. On this digital program of the National Committee on US-China Relations, we're unpacking whether that's realistic, what it would mean for US industry, and what the real roadblocks are, from national security reviews to Chinese export controls. To do that, I'm joined by two experts, Ilaria Mazzocco and James Rowland. Both are joining us from Washington, D.C. Ilaria is a deputy director and senior fellow with the trustee chair in Chinese business and economics at the Center for Strategic and International Studies, CSIS. Ilaria has written extensively about China's EV industry, including for her PhD dissertation, which investigated how Chinese local governments use industrial policy efforts to promote the technology. James is the founder and CEO of Clear Arrow Policy Advisors, a firm specializing in complex international government affairs for global corporations. He previously worked for 15 years at Ford Motors, including in Shanghai. And my name is Gregor Williams. I'm an associate director at Rhodium Group, a China-focused independent research provider where I focus on China's auto industry. Ilaria, President Trump has said he would be happy to let Chinese OEMs build here. At the same time, Chinese firms like Geely have publicly signaled interest in expanding their US presence at the CES a couple of weeks ago. Can you start explaining why allowing Chinese auto investment is even a question in the US? From Europe, I'm based in Berlin, where I'm sitting. Chinese EV investment is controversial, but largely legal. What's structurally different in the US system, and what actually prevents Chinese automakers from investing in the US today?
Well, first of all, Gregor, it's a pleasure to talk to you as always, and to be joined by James as well. I'm really looking forward to this conversation. And I'm sure James actually will have thoughts on this very question as well. So, I mean, I think there's a couple of different things, right? First of all, there are actually some Chinese automakers that have, in some ways, a presence in the United States, right? So actually, Geely is the owner of Volvo, and a Volvo, of course, actually has a factory in the United States, right? And certainly you can see Volvos down the street, or Polestar, which is another EV maker that is owned by Geely. So, it's not entirely true that there is sort of zero presence of Chinese technology. And in fact, you also see some partnerships. For example, in the battery sector, right, Ford has a licensing deal with CATL, which now seems to be shifting towards stationary storage rather than batteries for electric vehicles due to a shift in sort of Ford's own strategy. But, again, it's not that, you have zero presence of Chinese manufacturers. And yet, it is true that you're certainly not seeing BYD, for example, or Geely open a factory under the Geely name in the United States. And that's because there's a couple of different obstacles there. One, and I think the main one here really is the complexity around the connected vehicle rule that was introduced under the Biden administration. So there are actual sort of restrictions on certain types of hardware and software that are in cars, very connected vehicles, right? Which is a lot of modern cars these days that have connectivity capabilities. So there's actual restrictions for these components that are made by Chinese manufacturers or in China. So actually, this has created some difficulties even for Western manufacturers that may be reliant on Chinese components, right? So that's certainly an obstacle there. There's other obstacles in accessing potential tax credits where those tax credits are still present, right? And a lot of those have actually been rolled back since the Biden, the Inflation Reduction Act has, a lot of those provisions have really been rolled back over the past year. But, again, there's restrictions there through what is known as the Foreign Entity of Concern clause, which of course allow Chinese manufacturers to have trouble complying with. So I think there's, a couple of different things there, and those are sort of actual legal obstacles. There's also just political obstacles, right? It's not clear that Chinese factories would be welcome either by politicians in DC or by local communities, right? So a good example of that, again, in the battery sector, where we have seen a little more, over time, there's been a little more interest on the part of Chinese manufacturers, is Goshan, which is a battery manufacturer, tried to open two factories in the US, one in Illinois, which has had, relatively smooth progress, but one in Michigan, which has been incredibly controversial. The local community pushed back. There's been, a lawsuit, a lot of criticism on the part of policymakers, right? It got really politicized very quickly. And I think that's sort of a lesson for Chinese manufacturers that this is not a easy sort of environment for them to invest in, even though the payoffs may be really big because this is, of course, a huge automotive market, right? And so at a time in which Chinese EV makers and car makers in general are sort of in a difficult position because of over competition in China and are trying to go anywhere really around the world where there might be consumers, the United States would be really sort of the big market for them to break into. But it's certainly, I think, one of the more challenging markets for them to enter, both as, exporters, but also as investors. So yes, I don't expect there to be sort of I don't expect that tomorrow we'll see any sort of announcements on the part of Chinese manufacturers just because President Trump has indicated that perhaps he might be interested or open to some sort of arrangement.
Okay, so you were saying we have a whole host of kind of legal, I guess also commercial reasons, and then the whole political question, especially about on the state level, right, or even more local level on whether Chinese investments would be welcome.
And,
James,
and sorry, and let me just
yeah,
add, I didn't even talk
yeah,
about tariffs, right? So even
yeah,
there,
yeah.
like your entire value chain is based in China, and so just bringing in all those components. Now, of course, that's been a challenge for some other automakers as well. But yeah, just
Of course, right? And a lot of the cost advantage for a lot of these companies would probably also lie or rest within them having access to at least a large chunk of their sort of supply chains in China. James, your former employer Ford is reportedly, although there's denial on both sides now, in talks with Xiaomi about a potential partnership, including in the US. Based on what Ilaria just described, I mean, is this kind of given industry? I guess hopes that actually even if the president says, we want to welcome them, that investment might not be forthcoming because US industry's main reaction would be sort of concern and defensiveness, and they would actually look quite positively at all these kind of restrictions in place? Or do you think some firms are potentially actually interested in some form of collaboration, given that, the world is slowly shifting towards EVs, and I guess a lot of the big US car makers actually slashed some of their development budgets recently, and there might be a way actually to have some quiet cooperation here that might allow them to regain their competitiveness.
Thanks. First of all, I just want to say it's great to be on a panel with you and Ilaria, two people I followed, and thank you for the National Committee. That's been a long time friend of the National Committee and all the work they do. So this is an important conversation, and it's extra relevant in that your involvement, Gregor and Ilaria. I think Ilaria makes a point that I wanted to start off with, which is I think Chinese investment is really a bit of a test case in the US-China relationship. Can we coexist? Can we find ways to work together? And Ilaria outlined a number of areas where it's kind of a no-go. There's issues, there's real policy hurdles. And the Goshen example is a good case. And then, of course, people have mentioned about Ford had worked with CATL. Rather than a CATL investment in the United States, it was a licensing deal that Ford undertook. And that seemed to be more palatable. So I think there are policy frameworks that allow the Chinese to invest in the United States without exposing themselves to the brunt force of opposition that Ilaria talked about. For example, would a Chinese car plant be welcome in a community? I think that's a real case. Even with the CATL investment, there was a considerable amount of backlash and questioning, but the fact that they were working with Ford made it different than on their own. For me, I think I did see the article in the Financial Times, and I saw that Ford quickly disavowed the veracity of the story. However, it does point to the fact that these are live conversations. And I think to frame it a little bit from my years at an auto company at Ford, there's a concern now of the prowess of Chinese manufacturing. There's I think, a quiet realization, and some executives are not so quiet. They acknowledge the superior EV architecture, the tech stack, that piece of it's accelerated beyond where some Western manufacturers are. But I think there's some red lines, if you will. One is the imports don't make sense. They would be a direct threat to domestic business models. And so just as, by the way, China maintained high tariff walls for a number of years, there's probably a lot of support for that going forward. And I think one of the frameworks that would make Chinese investment in the United States is potentially with a joint venture partner. As Western car companies, both Gregor from your world and the United States, had to enter into joint venture relationships to enter the China market, it may be time for people to think about, if there is going to be Chinese investment in the United States, what are some of the precursors? And I think one is an opportunity for Western companies operating in the United States to be a joint venture partner in that. There's lots of other things, ICTS and tech stacks, but I think just to frame it, I would start with there.
Fascinating. And I mean, definitely I can see that same sentiment as well in Europe now. Actually, it's interesting. I think 5, 6 years ago, I think industry observers, they probably would have thought, oh, some of those state-owned enterprises in China, they don't innovate, they're not commercially viable without subsidies. But now, I mean, the Italian government, I think last year was actually vying for some investments from Dongfang, right? One of the kind of three centrally owned, state-owned enterprise. I think something that before 2020, nobody would have guessed either in policymaker circles or industry circles, right? So it's really a reversal of roles here. But James, do you think, I mean, is there interest on the sort of, I would say, like, let's call it direct competitor tie-ups as well, right? I mean, the Ford CATL one, I mean, this is, I guess, more an upstream partnership for Ford, right? They want to secure and lock in supply in an area where, frankly, most of the OEMs, maybe apart from Tesla, are not really going, right? I mean, most of them see batteries as something that they need to procure. It makes sense to have some knowledge in-house, but now looking at some of those other potential partnerships, right? When we talk about the BYDs, the Xiaomis of this world, is there also a risk basically that you are allowing the wolf into the pen, so to say, and kind of bring your competitors into the US market?
Yeah, I would say there is that concern. And I think the dominant reaction in Detroit, at least from my contacts, that when I was at Ford and now and maintain my contacts now, is this dominant theme of concern. But where are we going to go from here? We can't be an island forever. I think this actually, the China question presents a stronger case for USMCA. And what I mean by that is maintaining, and I know, Ilaria, there's some folks at CSAS that talk about this, but the Fortress USMCA, the Fortress North America, so that we maintain our competitive supply chains to compete with China. And then, of course, your direct question, Gregor, is what about Chinese investment in the United States? I think we need to treat this as a live issue. I think the president's visit, as you framed it in April, it's reasonable that these types of questions are probably in the backgrounds of the Trump administration now. The reality is it could lead to billions of investment, jobs. They'll likely in this move would have to bifurcate their tech wiring, so their tech stacks would wire differently for a Western, US, Canadian, Mexico vehicle as opposed to how they're wired now. We can talk about more of that later. But I think people have to be seriously considering, given the growth of China's auto sector, where and how does the United States play? And I think at the end of the day, if they're going to be here, I think the Western car companies, because I've broadened it, there could be other Western car companies, German, Japanese, in the United States, maybe partner, have a JV with Chinese car companies. How do we go about this? And I think we should invest the time as we're doing today to talk about that, because I think if things move quickly, as they did in China when China opened up, it'll be a race for a joint venture partner as opposed to if you want to do that. So I'll leave it there.
Fascinating. I mean, you just opened the question as well on the kind of USMCA renegotiation, which is also happening this year, right? Maybe to both of you. I mean, how does that play into the equation, right? We obviously have the Treasury Secretary Bessent, USTR's Greer kind of warning Mexico and Canada against becoming backdoors for Chinese car companies, right? We had the Treasury very much pushing Mexico to not open to door to certain Chinese investments. There were a lot of rumors back and forth whether BYD was going to invest in Mexico. Now, just last month, a few weeks ago, we had Canadian Prime Minister Carney visiting Beijing and signing this big deal, right? I mean, allowing nearly 50,000 Chinese EVs coming in under the 6% MFN tariff rate rather than the 106% tariff, and also opening the door to Chinese investment. I mean, how do these two components go together? On the one hand, parts of the administration seem to be warning against Chinese investment. And then we have the president himself saying, if they want to invest in the US, then that's fine. Unpack that for us a little bit. I mean, Ilaria, do you want to go first?
Well, I do think there are there's a lot of different pieces, and it's not always entirely clear if they are all going to fit together in one sort of neat image. And I think that's been, I think the result of this is, I think James is right that there's like very conflicting views on this, and I think even within companies and certainly within government, I think there's differing opinions on what would be the best strategy moving forward. And I think that's true even in in Canada and Mexico. And of course, one thing that is worth noting, and I think, this is what James was getting at with the US becoming more and more of an island, is that the rest of the world is moving towards, to a certain extent, more integration with these Chinese value chains, right? You have more Chinese exports, you have more Chinese investment, you have European OEMs, and Gregor, you're more of an expert on this than any of us, but European OEMs that are certainly very open to having some of these technological deals with some of these Chinese companies, right? Leapmotor and Stellantis, Xpeng and Volkswagen, right? And so I think, in a world devoid of sort of geopolitical tension or economic security, you maybe would see a lot more, you would see a Xiaomi and Ford deal probably, right? I think it would, in some ways, they would make sense. But there are these big concerns about, this isn't coming into the context of, as we said, like a lot of other sort of geopolitical tensions, also this very rapid expansion of Chinese automakers globally, right? There's this fear of this takeover, this shift in technologies, right? So there's just like it's a nexus of different things happening all at the same time. And I think in the context of the USMCA, what's happening is, yes, you're having this automotive piece, but it's also coming in the context of, the Trump administration really rewriting the rules of the global international order and the trading system and what the partnership with allies looks like, right? So I think there's just a lot of different moving pieces. And so I think we'll be forgiven for not always seeing whether or not there is actually like a grand strategy behind all of this. So yes, absolutely. I think there would be a lot of conflict if the US is preventing Chinese investment in Canada and Mexico on the basis of national security and then were to welcome that investment in the United States, right? But that would actually move in a way that would actually be fairly consistent with sort of this America First view, where, it really the goal is also to just, reshore manufacturing, to increase foreign direct investment in the United States, right? And a lot of the deals that we've seen between the United States and many of its trading partners have involved this big foreign direct investment package. So I think, again, I think if it were a world where the United States and China did not have these big national security and economic security sort of conflicts, you probably would see a deal that involved a lot of foreign direct investment, but you're also seeing a lot of tension and resistance to that because of the sort of national security concerns. So I think, I don't think we have a sort of neat solution to that yet. I will be very surprised if in April what comes out of the meeting is that, BYD gets to open a factory in the United States, right? That would be, I think, a big shock. So I don't know if James has a different view, but I don't think that that's probably not what we're going to see. But again, President Trump is certainly, unpredictable in many ways, so you never know.
I think Ilaria has pointed to a couple important themes. One is the America first. And I would argue that if there is going to be Chinese car manufacturing in this hemisphere, I think the president would want to have it in the United States. He does not
Mm,
want to see a massive facility on the southern and the southern part of the U.S. in Mexico. We all heard some of the public statements about the Canadian deal with China, which the prime minister has said is not formally a deal. He doesn't want to get in trouble with a full FTA with China. But I think the president, if there is going to be manufacturing for this hemisphere, I think the president would like to take credit for that. And I agree with Ilaria. I don't think it'll be a branded BYD facility. It could be, and what I think people need to be focused on, okay, what are the criteria if it is a joint venture type of situation where there's benefits to local OEMs? Getting to the USMCA point, I don't think there has ever been a more important policy framework for the auto industry in the United States than this review of USMCA. I really think it is the preeminent policy question that could set the foundation for the auto industry in the United States and North America going forward. I think Larry also mentioned there's a lot of things, that in itself is a massive policy question. And then you layer onto that after the companies have done major write-downs on their EV investments. Well, do we also
mm.
want the Chinese here? So I think there's a lot, but sequencing is important. And I would say that the most important piece of the conversation in the next few months will be this review, all the discussions leading up to the end of June or July negotiation of USMCA. If the United States, I think, takes what I think is an opportunity to tighten the cordon around North America and kind of own this regional supply chain and run with it. And by the way, I suspect there will be content levels caps on Chinese content. That would be a no-brainer. You can't simply allow more and more content to be shipped or transshipped or assembled south of the border or what have you. There has to be limits on that. And I think there'll be potentially more content required of the United States and higher penalties for non-USMCA compliance. But I think the point about would the Chinese welcome an opportunity? Absolutely. Have they lobbied for it? Yes. Did they lobby for entry to Canada? Absolutely. So there's a lot going on. Totally agree with Ilaria. I don't think you'll see a branded, potentially a BYD or a Xiaomi plant. However, a massive investment partnered with a company, I think has to be considered unless you get a full court pushback from the OEMs. And what I'm hearing is certainly and by the way, a JV that would produce in the United States and maybe maintain the import of prohibition. So you'd be producing it, as the president said, if you want to sell here, you build here. And I suspect the folks at USTR, if you want to build here, then you would ship to Canada and ship to Mexico potentially for the hemisphere. So as a start. So a couple of thoughts on that question, Gregor.
Yeah, no, I mean that's fascinating. I mean, James, on the sort of point that you made as well about the Xiaomi's and the potential models that we could see, right? Joint ventures, licensing deals, right? For CATL. I mean, I guess also again to both of you, what do you think does the situation look like from the Chinese perspective, right? Maybe let's start with the company perspective. The way Ilaria described it, to me, there's a tons of risks here, right? Taking this sort of gamble, right? You have a price war at home, right? So a lot of the Chinese car makers are nearing, perhaps some of them are nearing profitability. A lot of them are losing some of the profits they've actually gained, right? Looking at BYD, the sales numbers weren't great in January. So is there actually additional capital that they might want to invest in some of those partnerships in the US? Or are they just saying, you know what? The US is such a hotbed of political pushback against our companies. We're just going to focus on the rest of the world and let the US deal with themselves. And maybe after this administration is out of the office, then we can see perhaps with a more long-term view of what the situation is. Maybe you guys want to unpack that a little bit more, and again, also like diving a little bit deeper, what potential models could we see? Is there like a model that would actually be very capital light, right? Where we basically just have like a software licensing or an architecture licensing. But again, right, especially if we look at software, I see a lot of risks, right? Especially on the ICTS side. So yeah, just putting that out there for the both of you.
I'll just throw in a couple of thoughts. I'm actually watching the TikTok deal closely
Hmm.
because I think that will be sort of interesting to see. You know, that seems to be taking the shape of a joint venture that's majority American owned. Obviously, lots of ICT concerns there. So that's going to be, and it's certainly been very politically controversial. Of course, TikTok, I think, has, you know, an incredible base of supporters in the United States, which I think has made it challenging to you know ban outright. But I think that would be sort of a one interesting model. Obviously, different in the case of cars because you actually have to build them. But I think that's potentially one pathway. I think the other one, you know, James has been pointing at it, right? You know, something that U.S. automakers think is in their best interest that can allow them to access some technology they don't have right now through some kind of, you know, either joint venture or licensing deal, which on the other hand actually could help the Chinese manufacturers, right? They have less risk. They would have to, you know, put up less capital, right? They can sort of benefit a little more. I think, you know, the thing about the US market is that they could potentially access, you know, much higher margins. You know,
Mm.
it's a higher end market. These are companies that, in many cases, are desperate to find new markets, right? The Chinese market isn't growing. It's very much sort of like, you know, a lot of companies competing for the same pie, right? It's the share of the pie, but the pie isn't growing. And a lot of the other markets they're going to are small markets, right? So then they're fragmenting, and that creates a lot of new costs and challenges, which, you know, they're doing. You and I, Gregor, have been following this closely. They're internationalizing very rapidly. But, you know, if they could access the US market, that would make their life a lot easier. So I think they're still interested, but I think they should be well aware of all the challenges and the risks associated with going solo in the U.S. market.
And I'll pick up
Yeah.
exactly where Ilaria left off, which is I think the Chinese OEMs will also have go into this with their eyes wide open.
Mm.
There, it might be an opportunity with the White House blessing to break into the United States, because I think they do want to get into all the regions Ilaria talked about, margins and size and so forth, even with a joint venture partner. However, uh, will they be received well? Will those vehicles be the consumer acceptance be there? Will what will be the regulatory framework in the United States in a few years from now? These vehicles might not even be online until 28, maybe 2 years from now, reasonably. So, would they have certainty after working on this market? And if there's an import prohibition, if that continues for a number of years to get the domestic, you know, build where you sell that the president mentioned, um, the Chinese car companies, they've got a lot of other business challenges to solve and markets to develop. So there's no shortage of opportunities that they're chasing. And I think the United States would be a large opportunity, but a large challenge. And whether they would want to take that on remains to be seen.
Mm. One question I want to pose to you. So far, perhaps that's me, but maybe the more common grounding has been, you know, that Beijing and Beijing's leadership are broadly supportive, right? I mean, there's been the kind of China Global Inc. sort of, you know, Chinese companies going out. It's been a very supportive policy environment for the last 2 decades, I would say, right? But now looking at this, and we have a similar policy context in the US, but also in Europe, right? We're talking about outbound investment screening in certain sectors. China certainly thinks that the EV industry is one of its technological assets, right? And we've seen how, I guess, the prowess as well of China's auto industry has turned a massive trade deficit into a surplus in a record number of years. How do you think Chinese policymakers are looking at this? I think on the one hand, we can clearly say, yes, they're interested in, you know, cementing a broader deal, kind of delaying further US measures, especially on trade. And if that includes an investment deal, they might be up for it. But at the same time, we have these export controls on certain battery inputs. We have concerns about unemployment in China as well, right? I mean, James, you were saying that a no-go for the Detroit car makers or US car makers would be imports from China, right? So that is already off the cards. You also mentioned that as part of the USMCA renegotiation, you're expecting a cap on Chinese content, right? So where does kind of the Chinese economy fit into all of these questions? Maybe, Ilaria, we're starting with you, right? You've kind of studied the Chinese policy ecosystem for a number of years. Where do you see the direction going?
Well, I think we've actually already been seeing a bit of this tension, right? Where, as you said, right, you have a lot of factories in China. There's certainly been, this challenge of involution, with falling margins, over competition, a lot of supply, which has been pushing a lot of automakers to export more. And yet, internationally, and not even, leaving the US alone, the pressure from other governments has been, if you want to access my market, you got to make it here. Right. So you're now seeing a lot of these Chinese companies. And again, if you want to just look at BYD has committed and started building a lot of factories outside of China. And it's not exactly clear how that's going to all sort of work out in a sort of coherent fashion, because you can envision that this is going to be sort of again creating a lot of redundancy across the spectrum. So I think that is something that already is somewhat present, and I think already you're seeing how a lot of Europe. This is a very live debate. Is like, how can you pressure these Chinese companies, or pressure or incentivize these Chinese companies to transfer more of their know-how and more of the value added part of the production process outside of China, right? So how can you capture more of that value added if you're the recipient country of, the country that's receiving the foreign direct investment? And there's a lot of, I think a lot of experimentation and thinking around this. I think different countries are interested in different pieces of this as well. But I think, that is certainly something that's not going to come naturally out of the goodness of the OEM or the Chinese government's heart. That's going to be a negotiated outcome. And I think, to be honest, that's always been the case, right? I mean, if you look at the automotive sector in previous years, certainly when it came to the types of investments that Western automakers made in China, but even when Japanese automakers started investing in the United States, these were usually political deals that led to these sort of ultimately what are not market but business decisions. Let's put it that way. It's not necessarily just sort of a natural process. I expect that's what we'll be seeing here in a lot of countries, and I think if the U.S. wants this type of investment, that is also going to be something that, and right, we're talking about President Trump's visit in conjunction to maybe a potential deal of some kind, right? This is going to be political. It's not going to be something that's purely decided between businesses.
And then maybe as a last question, how do you see this kind of fit into the broader state of US-China relations? I mean, the way, Ilaria, you just framed it, right? I mean, also looking at this against the backdrop of the 80s and Japanese investment in the US, right? I mean, do you think, okay, this could actually become a template, right, for some of the broader tensions that we're seeing between China and the US, at least on the economic side, right? I'm thinking about China's massive trade surplus. If you shift all of that into investment, right, that might alleviate some concerns. At the same time, are those sort of cybersecurity and national security issues ever going to go away? So, I mean, maybe if you can just, in a minute each, sum up how you think that might how that might fit into this broader state where we are now in early 2026.
I think you framed it correctly. And Ilaria, in her last comment, it's going to come down to a political decision and what are the pieces that are being negotiated by the Chinese and by the Americans. And auto has to figure into that somehow, whether it's a direct opportunity for Chinese companies, which I think would be, they'd have to have their eyes open as well to see whether they want that, and whether US companies are really fully ready to embrace it. I think the president would be wise to check in with the auto companies who have had these big write-downs. Having said that, unlike the Trump's first term, my sense is the Chinese are very well prepared and doing their scenario analysis of what they want out of a deal and what they're prepared to give. And we'll have to see what comes out of it. And my final point of how this fits together, the for me, the preeminent policy conversation that we need to land successfully is USMCA. Otherwise, we actually impose costs on our domestic champions instead of leveraging a stronger regional framework that could actually be a foundation for competing with China on some level. So that'd be my few points to close there. But I'll be interested to hear what Ilaria has to say.
Yeah, I think it's how this fits into broader U.S.-China relations is obviously, I think as James said, right, the auto industry is obviously like a really important industry on both sides. What's interesting is that in some ways the auto industry, because of all these tariffs and rules and the restrictions that are in place right now, is in some ways less of a hotspot, right? There's less of an ongoing, immediate crisis. Everybody knows that this is a big challenge moving forward, but it's not necessarily the crisis right now, right? I think, right now the big priorities have to do with export controls on both sides.
Yes.
When it comes to exports, for example, the United States is very focused on agricultural exports, energy exports, and this is on the Chinese side, right? The auto exports is, I think, certainly a desire or some kind of maybe investment. So again, I think it's part of this broader debate over trade and trade imbalances. I mean, I think what's interesting is that the Trump administration has moved away from sort of a more traditional approach to discussing economics with China, which had to do more of sort of system-wide reforms and structural issues, and much more on the sectoral level of, how much are you exporting of this, how much are you buying of this, and how does it add up with our trade deficits and trade surpluses. So within that context, I think all those could play a really big role. But, does this mean that the U.S.-China relations are resolved, right? That we have a prolonged period of stability? I doubt that, right? I think all the structural challenges are still there. And I think although it's much more of a symptom of the changing sort of balance between and technology and the competition that's going to continue to be there for, I think, a very long time. So I think, we would all probably welcome some sort of strategy that would help the U.S. auto industry in one way or another make progress. But I think the U.S. the competition with China is still going to be there for a very long time to come.
And I would just add, Ilaria, agree to everything you said, and the level of trust is razor thin. So a lot of
Mm.
these longer term decisions based on a strong relationship, and I'm not clear that we're there yet. It's a very tenuous relationship they're sort of holding on to.
Absolutely. And I think, James, the point that you made earlier is very valid, right? That even if you are a Chinese automaker, you will be looking at what is the next presidency going to look like? Does this hold in Congress, right? How much support for this is there beyond, the person of the president, right? Who I think certainly has some interest in this, but I think there is, actually a lot of skepticism about some kind of deal that would involve maybe Chinese investment or Chinese technology beyond that. So I think, there's a lot of volatility still in the political
Yeah.
environment and yeah, between the US and China.
James, Ilaria, this has been a fantastic discussion. The one thing I wanted to add, just coming back to your comments you made just now, there is also the broader global dimension. I think especially when we look at the ICTS rules, right? Other countries are watching this very closely, and especially how this administration is handling the issue, right? Because I think under the Biden administration, there was also a broader effort, right, to bring other countries on board, right? Canada was signaling we might be following the US, right? The EU just released its proposal for a cybersecurity act, which I would say actually copies some of the ICTS elements in the last 2 weeks, right? So I think looking at this could also become a broader template for other countries on how they're handling Chinese investment, right? Both in the auto sector, but also beyond. Leaving it there, I would like to thank the both of you and also the National Committee, especially the National Committee staff who, behind the scenes made this possible. Thank you very much. We hope you enjoyed the program, and we also hope that you will join us for future National Committee events. Thank you.